So you may have stood for long hours queuing for the latest iPhone, or maybe scoured the resale market for that rare Labubu. Perhaps you're even considering buying that expensive tennis bracelet that's from a limited edition collection or something like that. For your birthday, you can treat yourself. Now, we tell ourselves sometimes that these purchases are investments and that they will hold value. But what if I told you that these purchases, for some of them at least, the company's stock is the real winner? Welcome back to the Money Talks podcast. I'm Andrea Heng and I'm your host for today, as always. Now, from sneakers to blind boxes, the hype is real and all of y'all are feeling the FOMO, I bet. But is our love for stuff coming at a massive opportunity cost to our portfolios? Joining me today to break down the numbers and help me make sense of it all is Zavier Wong. He's a market analyst at eToro. Welcome to the show, Zavier.
Hi, Andrea. Thank you for having me here.
So this is a very fun episode that I've been meaning to do for a while now because I've always seen friends queuing up for Labubu's limited edition sneakers. And I'm like, is limited edition even limited anymore if everyone's queuing for it, right? So before we dive into all of that, I'm just going to rattle off a few popular names and items. And you tell me whether we should buy the stock or the stuff. Are you ready?
This is a very tricky one, but I'll give my best shot.
I'm sure you'll be fine. Okay. The latest iPhone.
Apple stock.
Okay. A pair of limited edition Nike sneakers.
Probably the sneakers, yeah.
The sneakers? Interesting.
Probably the sneakers.
Okay. This one is one of my wish list items. A love bracelet from Cartier.
It doesn't really relate to me, right? So I'll go for the stock. Yeah.
The stock, okay. Yeah. Labubu from Mart.
Definitely the stock.
Okay, one last one here. A rare Pokemon trading card.
All right, this is a very tough one.
Okay.
Because I've seen how Pokemon cards really appreciate in value in recent years,
They do.
right?
Kind of like baseball cards in the US, right?
Exactly.
Right.
But the thing is, I'm not really into it.
Right.
So
Okay.
I've got zero idea. I probably got to get my friends in to help me.
Okay.
But I'll probably go for Pokemon cards here.
Pokemon cards. Okay,
Yeah.
so quite a mix here.
Yeah.
So I want to talk about that study you did at eToro.
Yep.
It looks at 5-year performances of popular products versus their stocks. Can you walk us through those numbers? I read something about how a Cartier love bracelet grew in value. Goodbye bonus. But the stock of the parent company, Richemont, actually performed better than the bracelet itself. So talk to me about the numbers from your report.
Yes. So we really dive into these numbers with the idea that not for people to give up on their hobbies,
Okay.
right? Not for collectors
Not to
say
discourage collecting, yep.
Exactly.
Okay.
Personally, I used to collect as well. Back then when I was in primary school.
What did you collect?
Pokemon cards.
Okay.
Which I think half of Singapore did back then, right?
They did, yes.
Which also is where I always joke that my mom is probably the worst portfolio manager I've ever had.
Oh no, what did she
cleared out
do?
my Pokemon cards when I got older. But there's no point harping over it. That ship has already sailed,
It's
right?
okay lah. Thanks, Mom. It's all right.
Exactly. I don't actively collect now, but I completely understand why collectors, they do it. There's this thrill of the unknown, the mystery element that's tagged to it. You get that dopamine hit, which you don't exactly get when you buy a stock or invest in stock.
Because it's in your hand. It's tangible, right?
Yes. Yes. So, and there's this instant gratification as well, right?
Yeah.
Which you don't get it. But if you flip that around, then investing in the stock market is oftentimes a lot more predictable.
Mm-hmm.
It's oftentimes a lot more consistent, right? Why? Because the performance of a stock is fundamentally driven, I like to say.
Okay.
So by that, I mean they are driven by the business performance.
Right.
They are driven by the revenue that the business brings in,
That's right.
the margins, the capital expenditure, and so on and so forth. And your hype products, on the other hand, they are very much driven by hype cycles.
Yeah,
right?
they are.
Which is very unpredictable. So regarding Labubu,
Yes.
you just talked about it, right?
And I don't get it. But please, yes.
So the Labubu craze was just sometime back in 2024, right? That was just 2 years back. People were obviously queuing for it, and there was just this hoo-ha all over Labubu toys,
Yeah.
right? But interestingly, back in 2024, during the first wave of the hype, Pop Mart shares were trading at about 30 Hong Kong dollars,
Okay.
right?
Okay.
For reference, Pop Mart shares is currently trading at about 200 Hong Kong dollars.
What? Oh, wow.
Yes. So we are talking about seven folds there.
Yes.
Right? And we're not even talking about all-time highs here. All-time highs of Pop Mart was trading north of 300 Hong Kong dollars.
Wow. That's like a lot. That's 10 times more.
Yes.
Okay.
So the point I want to make here is, yes, there is no need for anyone to give up their hobby, but you got to ask yourself this very real and honest question on whether you're collecting for joy or are you quietly trying to run a hedge fund from your living room, right? Yeah. So
But that's the thing, right? I'm trying to understand the psyche of the people who do that because you've seen reports, and I'm sure you've read them too, of people collecting these things, cataloging them, and then they make money from the resale market. I mean, certainly there's some kind of sound investment there, right?
Yes and no. I would say that a lot of it hinge on whether there is a functioning market, right? Because by functioning market, it doesn't mean just having a place for you to buy or sell your collectible, right? It needs to be a market where you have ample liquidity.
Right.
So by that, I mean, when you so decide to sell it, you are able to sell it at that price, right?
There are enough buyers to meet the supply and vice versa.
Yes. So there must be a bid and ask,
Okay.
right?
Okay.
Which oftentimes is the problem here because collectors all can be good, but when the downturn comes in, when the hype eventually dies down, right? What people come to realize is they struggle to list their products. Everyone is rushing to list their products. They struggle to sell it.
Yep.
There are limited buyers, right? And that's also where people kind of fall into the trap of financial losses, regrets, that sort of thing.
Yeah, we have heard stories of those kinds as well. So, snap verdict here. Does the stock or the stuff typically win out, or is it not so black and white?
I would say it's not exactly that black and white. Why? Because over the years, there are definitely collectibles that have done really well.
Correct, yeah.
Right? Pokemon is a great example. Back then, they were nothing more than just cards, right?
Yeah.
Nobody is really treating them as investment vehicle, right? But fast forward 20 years later to today, you have celebrities, you have influencers like Logan Paul, right? Flashing the $1 million Pikachu card.
So I'm wondering if that's the vehicle that's making these collectibles seem investable.
It's very hard to tell because you never know whether who the company is going to work with next.
Right.
It's just like Labubu worked, not exactly worked with, but you saw
Lisa,
Lisa, right?
Yeah.
And all of a sudden, the market just ignites.
Yeah.
So that's the same case for Pokemon cards. And that's precisely, I think, the unpredictable nature of collectible.
Okay.
And where people got to be really, really tactful and careful about it.
So the takeaway here is owning the stuff can actually increase in value quite rapidly, but it's not predictable.
Yes.
That's the caveat here, right?
Correct.
Got it. Okay. So based on the study, what similarities are there between the stuff that usually outperforms their company's stock? Is there an example of an item that has outperformed its stock?
That's a really good question, Andrea, because rarely do you see that happening. Why? Because when you look at short periods of time, hype can make everything look very brilliant,
exactly,
right?
Yeah.
But you give it, say, 5 years, 10 years, or 20 years, many of these collectibles or hype products, they tend to depreciate in value.
Yes.
Some even just outright fall off the cliff, right?
Yeah.
So one great example, I think, is Nike Air Force Ones.
Oh,
that
yes.
sneaker, right?
I think I have a couple in my wardrobe, actually. They don't belong to me.
Then they might be worth a small fortune today, right?
Wow, okay.
So especially the limited edition ones, like Halloween edition, I think back in 2019.
That was a big one, I remember.
Yes. So those shoes we saw prices appreciate, like, I think, close to 300%. But comparatively, if you look at Nike stocks, over a 5-year period, the stock has kind of traded at its low.
Right.
It's down 52%.
Well, but that's because Nike doesn't only produce Air Force Ones. There are so many other aspects of its business that may have brought down its stock value, right?
Correct.
Okay.
But what we're comparing is that, if you are going for the stock versus going for the collectibles, that there can be a certain form of risk as well. So you've got to
Right.
really measure that.
So looking back at the data is a bit of a mixed bag. So I'm just going to cite some figures for you here. A Labubu figure in 2019 saw a 2,500% jump in resale value. And you talked about the stock earlier. It's up quite a fair bit, 10 times its stock, right, over the last 2 years. A Cartier Love bracelet, which many would think is a safer investment because, gold, jewellery, etc. It actually lost value relative to its retail price. Why is there this big difference in the resale value between these two items? One traditionally thought of as a safer investment, especially.
I think it's a very difficult thing to tell, right? And it boils down to perspective,
Right.
right? I would say one man's treasure can be another man's clutter, right?
Yeah.
So and that doesn't make either of them wrong. It's just how people perceive value, right? And it's very difficult for us to quantify
Yeah.
emotional value that you put into a specific product. Yeah,
That's true. It's kind of like my husband's CDs that I had to store away. And there's like,
it's taking up too much space.
it's taking up space. But then I find out recently that there's a lot of value to be had because apparently there's a market amongst the Gen Zs for buying CDs now. So look for me. Okay, so for the average person who isn't a professional flipper, right? How can we identify the difference between a potential collectible that might appreciate and a product that's just likely to lose value the moment we open the box? So I'm thinking of those Nike Air Force Ones. You take them out of the shop, you can't tell really
Exactly.
if that pair of shoes is going to be escalating and surging in value 5 years down the road, right? So I mean, is there a way somehow?
So I think it really boils down to a lot on chance, right? Like you said,
Yeah.
Andrea. You are effectively shifting the experience toward probability
Right.
and paying for uncertainty, right? But that's also the fun of it, in my opinion. It's just, if you are buying, say, that there's no wrong in collecting.
Sure.
If you genuinely like a figurine, if you genuinely like a pair of sneakers or even a bag,
Yeah.
right? Then the joy of owning it, of buying it is real.
Right.
It's very difficult for you to put a price tag on that, right? But coming back, I think the focus here is more on mindset.
Right.
If you are investing or buying in one piece of that item, because you genuinely love it,
Yep.
then that's very different from you buying 10 boxes,
Yeah.
hoping you can profit off it.
Correct. And I have
Right.
seen people walk away out of, I don't know, JD Sports or Foot Locker with
Max.
10 boxes of shoes they think is going to go sky high in value later on.
Yes. And, coming back to the point, even season collectors, they can get it wrong as well. And there's just really no clean formula
Yeah.
in deciding whether a product can remain trendy or not.
What other behavioral biases, by the way, sort of drives this hype factor?
I think it's always people having the mentality that it's going to be this time,
Yeah.
right? I'm going to get like the rare collectible.
This is it.
Because nowadays blind boxes, they always have like, that hidden collectible
Right.
in it, right? And people usually eye for it.
Oh, I see.
That's very similar from you pulling, Pokemon booster packs, right?
Right.
The last time I did the research, I think Pokemon booster packs are going for like $12, $13 today. Very expensive. But anyways, so I read about this, how everyone is trying to eye on this specific Pikachu, but the chances of you getting that Pikachu is maybe 1 in 1,000,
Wow.
right? And the thing about the resale value of that single Pikachu card, if it's in pristine condition,
Right.
you can sell it for maybe north of $1,000.
Wow.
But if you flip that math around, buying 1,000 booster packs at $12 or $13 per pack,
You're spending more.
you're spending a lot more. But of course, if you get lucky, back to the example I gave earlier about how you're shifting the probability towards really luck, right? Then yeah.
Okay, yeah. Luck feels like almost the key thing in this game.
Precisely.
Okay, so there's an idea floating around that I want to run by you. So the idea is if you spend $1,000 on a new gadget, you can just put $1,000 into the company's stock. is this a viable way to balance, enjoying life with the stuff while also building wealth in stocks? So what's your rationale for this?
I don't think that you should give up the product entirely
Okay.
and allocate all those funds to investing.
Okay.
But do it in a rational manner,
Okay.
right? Let's say I'm using an iPhone for the past 3 years.
Right.
It's really old and clunky already.
Yeah.
And then probably makes sense for me to change a new one.
Mm.
But if you're looking at changing your iPhone or Apple product every half a year,
Right.
then perhaps it's worth just taking a step back, look at it from a more measured perspective, right? Does it make more sense
Yeah.
for me to actually invest in a company that's behind this?
So it's essentially going back to the basics and fundamentals of investing. Do the math.
Yep.
See what actually works out for you, right? If your expenses are going to outweigh what you're going to invest in, then maybe you might want to flip that around.
Yes.
Okay. What are some items then that you would recommend investing in? Because I know there are wine investors, there are watch investors, and I know some serious wine and watch nerds out there. They really spend serious money on it. Art as well is coming up when it comes to an investment instrument as well. So what would you recommend as a safe, sound investment that you kind of have the balance of both worlds, right? You do build your portfolio, but you're also sort of enjoying this thing.
Yep. If I were to choose something to invest in, a physical item to invest in,
Right.
it's probably something that I'm happy to invest in, even if the value doesn't go up eventually.
Okay.
Right? Even if one day the market decides that it's no longer fashionable. Right?
So for practical sake.
For practical sake, right? Something that can still give me the emotional or practical value. So coming back to it, wine investments, watch investments, art investments, or even property investments, right? I think these are things that tend to have a slightly higher barrier of entry,
Okay.
right? Because they are a lot more expensive.
Yeah.
Right. So I like to say that consumers nowadays, they're a lot more pragmatic. When your bigger ticket items like your property, real estates, it feels a little out of reach, especially early on in life. People naturally gravitate towards items that they feel are more attainable.
Right.
And that's precisely where collectibles comes in.
I see.
They fit that gap really well because you can buy them, you can display them.
So accessibility is actually an important factor.
Yes, accessibility as well as just the price of the good, right?
Of course, yeah.
Yeah. So having been able to sell those products, but you're able to buy them at a cheaper price, it makes people feel very productive.
Right. The bang for buck theory, I suppose.
Yes. Yeah.
Okay. So what's one rule of thumb you think our listeners should keep in mind the next time they're about to jump in line for the next iPhone or see the crowd at Pop Mart and jump in on that as well? And what's one rule of thumb you want to leave with them?
I wouldn't point these towards any single rule of thumb, but there are a couple of pointers that consumers should probably take note of.
Okay.
So one being how demand has to last.
Okay.
Right? And by that, I mean not just the excitement at launch, but how interests have to survive long after the hype dies down. Secondly, I think scarcity has to be real and not manufactured.
Yeah,
right?
yeah.
Because nowadays, if a company comes out and say that they're only going to manufacture 1,000 units,
Yes.
then it has to be 1,000 units, right?
Yeah.
Because if it manufactures more, then it defeats then there's no scarcity. There's no element of scarcity anymore.
Yeah, it's all engineered, like you said.
Yes, it's all engineered. And last but not least, which I also think is the most important point, which I raised earlier, is having a functioning market. A market that you can sell your collectible at any time, even in a down market, right? And those are probably three things that investors should really, or collectors should really note. And if any of those fall apart, it's arguable that you're not collecting a collectible with lasting value,
Right.
but more of trying to, resting on timing. Yeah.
I have to tell you this though. I can't imagine myself buying a pair of limited edition shoes and then not wearing them out.
Precisely. I'm in the same camp.
It's not for me. This luxury collectible market is just not for me. So you can come to me about those CDs, but maybe not shoes. Zavier, you've been a delight to chat with. I'm glad that you guys did this report. It was very interesting. And here's hoping that some of the people who are in queues to get something that's FOMO inducing have a reality check after this chat. Thanks so much.
Likewise, it was a great pleasure. Thank you very much, Andrea.
And thank you to our Money Talks community as well. That's right, for tuning in. I have a question that I want to leave you with now. Looking back at your biggest purchase over the last 5 years, maybe it was a watch, a console, a designer bag. Do you wish you'd bought the stock instead? I want to know from you now, and whether you'd change course today. You can let us know by commenting wherever you're listening to us from, or you can write into us directly as well. cnapodcasts@mediacorp.com.sg. We do check our emails for your messages, by the way. I'm Andrea Heng signing off for the Money Talks podcast. Catch you next time.